Hi, everybody. My name is John Doran, General Partner at TCV. Just for a quick intro, we're a global growth equity firm with offices in Menlo, New York, London, and Melbourne. We've been around for about almost 30 years, made about 350 investments, and we manage about 21 billion, and invested in SaaS companies from Twilio, Celonis, Splunk, and also companies like Netflix and Spotify, which have very similar SaaS-type characteristics. So I'm delighted to be here with an old friend, Shane Happach from Mollie.
Morning.
Great to have you in Dublin, Shane. Do you want to tell us a little bit about yourself and how you ended up at Mollie?
Yeah, sure, real quick. So I've had 22 years in financial services, 18 of them in e-commerce and payments. I'm on my third employer. I think the first two was largely focused on enterprise global, which was a lot of fun, dealt with many of the world's kind of leading growth companies. I wanted to join Mollie about 18 months ago to just to get back to a simpler kind of classic growth scale-up business. Also, European companies are still fighting for relevance and scale in kind of the global payments arena, so it was fun to try to build a European champion. So I've been based all over the world, so I've lived in the US, South America, Western Europe. Last 11 years was in London, and I moved to Amsterdam 18 months ago to take this opportunity.
Great. Maybe you've been at what, Mollie, 18 months, you said?
Yeah, a little bit more than 18 months.
Yeah. What drew you to the opportunity?
Yeah, I mean, obviously, the company went through a period of hypergrowth, so we were growing triple digits, pandemic tailwind, really kind of put the company on the map. Customers were just signing up 500 by the day, so that's obviously an exciting thing to be a part of, as well as absorbing that growth. And, I think, again, as I've often said in the public, I used to deal with Amazon, Netflix. These guys are super well-resourced, but small businesses are kind of the beating heart of the economy, and it's fun to get in there and help these guys compete, stay relevant, stay local, and also create a couple of category winners as well. Just when small businesses become large businesses. So to see some of our customers get up the ladder to large enterprises is super rewarding.
Got it. One of the things I think is interesting is you got a payments background, right? I think you were, helped build the world's leading payment company 10 years ago. And then I guess you joined Mollie, one of the most exciting kind of next-gen payments companies in Europe. But I guess we're here at a conference called SaaStock, right, which is focused on SaaS. So can you make the connection between payments and SaaS for us?
Yeah, for sure. I mean, I would say payments is the original SaaS business. It used to be considered a weird sort of utility, but it's a great recurring revenue business. It's obviously been attractive to loads of investors for that reason. We measure ourselves like a SaaS company too. We look at, I think, all the same metrics, right? LTV to CAC, what are our customer acquisition metrics? A good payments company in our space has a net revenue retention over 100%, which we do. And I think more and more, you just see this general convergence. So a lot of SaaS companies want to embed payments. A lot of payments companies want to develop SaaS-like services or kind of recurring monthly subscription-based element to what they do. We go to market through a number of different channels. One of our most high-growth channels is in the SaaS distribution model. So if it's recurring billing software companies or restaurant software, a lot of these businesses control the customer outcome well enough to want to embed payments, and we do a really good job at kind of taking a bundled customer offer. And Amazon unbundles everything. Try to do everything themselves. A medium-sized company really values being able to consume an intelligent bundle of kind of pre-integrated software. So we're in the software business as much as we are in the transaction business.
Got it. One of the things we love about Mollie and I guess payment companies that look like you is the net retention you guys talked about. As your businesses that you work with grow, so in turn does Mollie grow, and so does the loyalty. That's obviously critical in SaaS world. Can you tell us a little bit more about some of those business reviews and initiatives and go a little deeper there?
Yeah, I mean, first of all, we're very fortunate. I think we've got a great base of customers. We treat them well. So I think one of the things we've said publicly is in the SME space, you see a lot of kind of opaqueness or intransparent pricing, a lot of lock-ins, a lot of stuff that causes churn. So we've just got an incredibly low churn rate, which allows us to really focus our energy not just on keeping customers, but on helping them grow. I always say in the payments game, small business enterprise is always the same. You got somebody who's super well educated about their product and service in their home market. The minute they try to expand to another geography, to another line of business, they need a lot of help. So we tend to get most of our kind of net retention from helping customers expand outside the home market where we can really add a lot of value in helping them localize, understand local payment preferences, make an intelligent checkout, avoid mistakes that other companies make, et cetera.
Got it. Just to kind of bring it closer to home for some of the folks here, can you talk a little bit about maybe a specific example where you've gone deep like that with a customer?
Yeah, I mean, sometimes you can never tell which of your customers are going to be successful, but we had a shoe seller, which was called Restock. So sneakers have really gotten very in vogue. And everybody's wearing them, even with suits these days. So these guys just started in the Dutch market, built up to 20 million in turnover, decided that product market fit, would allow them to expand into other geos, had no clue how they were going to go about doing it. So we really sat with them and worked with them, took a bet on whether or not they'd be successful, but definitely invested the time. And I always say small businesses grow into large businesses. These guys were onto a great concept. They 4x'd in 1 year, which is kind of unusual. And they would tell you, in a public customer case study, a lot of that came down to the fact that they could focus on how to get the shoe storefront going, and we could take care of the payments and making sure that the operation was slick and that their brand didn't suffer from poor user experience.
Got it. We're here to talk about customer success, right? And I think customer success to product feedback loop, probably one of the most important relationships we see across SaaS in general. We certainly see it in our portfolio. Can you talk about how does Mollie manage this? And for example, how do you help customers take advantage of new features?
Yeah, I think we're somewhat fortunate. Again, in a long history of serving enterprise, everybody wants something custom. You're effectively making the payment service work with the way that Amazon wants to ingest files. In our cohort of customers, we're really lucky. I think if we're smart, in general, most of the features, if not all the features we seek to develop, are able to be taken up by any client, which allows us to be a lot more keen in terms of how we listen. So the first question we ask ourselves is this something that everybody can use? And if everybody can use it, what's the pain point that we're solving? So we focus a lot on serving product through, we have an intelligent dashboard. We're one of the few payments companies out there that have an app that actually does something. So most of the feedback that we process, besides the obvious, geez, it would be great if it was cheaper and you guys had more payment services to add to the basket, is generally a lot around usability and treating the payment service like a business management software. And for that, everything that we develop can be consumed by any client, which we're really fortunate to have.
Got it. I would bet there's not many customers at the conference today that have as many customers as Mollie. I think, just for the audience, you guys have about 130,000 customers. So customer success there seems like a pretty serious challenge. How do you make sure you support the right customers and as many customers as possible without diminishing quality? And what are the kind of big challenges that you face day to day on that?
Yeah, I mean, it's kind of fascinating. If you look at SME payments businesses, the vast majority of them are kind of NPS, net negative NPS companies. That in general, the theory is if you ignore customers, few of them will leave, but most of them will stay, and therefore, a lot of people kind of under-index on service. We've always said that that's a key differentiator. We use a lot of slogans in the company, like being easy to deal with and being responsive is never going to go out of style in any market, in any circumstance. And very simple stuff. We make sure that every customer can get to a human being. Okay, they have to do a little bit of work to do it. We use multi-channel, local language, and we try to deflect like any intelligent business because it's a cost to serve. But in general, we never make ourselves difficult to get a hold of, which sounds really simple, but you'd be surprised when a lot of people don't do it. And like everything, you need to tier your customers in a certain way that the bulk of the service effort is also dependent on value. And we do have, like everything, we have an active group of customers and we kind of have a passive group of customers. So focusing our energy on the active while not dropping the passives sounds really simple, but it's kind of the effort that we go through every day.
Got it. One of the things that we look for as investors when making investment is the values of a company. What's the mission? What's driving everything? I think you talked about a few things in that last answer, but Mollie, I think, is relatively famous for really being quite vocal about its values. It's pretty famous for its strong culture and values. Can you talk a little bit about how that's a difference maker in the world of SaaS versus the world you came from in payments?
Yeah, I mean, we're really proud of our value set, and I think we use this term all the time, customer love. I think we constantly remind people the customers pay the salaries, they that create space to develop. Without them, we're nothing, right? We're a B2B business, so we really try to value the fact that customers always has something important to tell us. I think the other thing is just very simple. We've gone for a full kind of onshore model, so our servicing teams are also in the Netherlands. We don't have big BPO centers or anything, so it's a really kind of tight-knit community. And we also promote from within, and we always tell people, if you can keep a customer happy as an entry-level customer support agent or customer due diligence, you probably have a bright future in selling in our business or in developing products. So we also treat customer service like a management trainee program, and I think we're really keen on making sure that people don't view it as an hourly job or kind of a back office function, but it's really kind of front and center in what we do.
Got it. You mentioned triple-digit growth at the beginning, and I'm thinking that's probably not held up during post-COVID. If you look at any of the payment companies that we see in the public markets, can you talk a little bit about how things have changed post-COVID for you guys, and also link it maybe to that last point around incentivizing your key people to make sure they're thinking about the long term?
Yeah, it's been a fairly unpredictable last couple of years, right? To a certain degree. I think you could fairly well predict that when society opened up again, that online COVID testing was not going to be this sort of category killing. So there were certain business models that were always going to be temporary. But there are others that have just seen a huge rebound. So it all depends on your customer base and a little bit how you're distributed. For some of the monoline businesses that I know that we work with, if you were only in online travel, your business may have literally gone to near zero and then rebounded at 600%. So for us, it's really a mix of people trying to grow over a big success, and then or other people who might have been temporarily depressed. But overall, I think the net growth is healthy, and some of the call it the grow over impacts are starting to wash through, and you get this spike of substitution. But in the long run, there's kind of this general, everything is moving to tech and software. A lot of retail shopping is moving online, but at a fairly kind of steady, methodical pace, and we just need to make sure that we pick up on it. And, one of the last things, I'm very fortunate, we're kind of a Western European-focused business. We knock on wood, right? We didn't lose a lot of customers due to financial hardship, and that's one of the things that we want to make sure that, revenue growth is great, but obviously in an SME business, you want to make sure that the customers stay healthy.
Got it. I guess people may have seen last year, you guys raised a ton of money, right? We had a monster round in May, June last year, maybe $400 or $500 million primary. So you guys are very well funded. And I think one of the things I'm encouraged by is that you're continuing to invest massively in the business. Can you talk a little bit about the 2 or 3 areas that you're investing in, and also kind of what your ambition is around those areas next 2, 3, 4 years for Mollie?
Yeah, look, I think like most companies, we try to be sensitive to investor and market needs, right? We want to invest, but we also want to be cognizant that not every investment has the same general payback as it might have a year ago, right? So we've kind of tamped down a little bit in certain areas of our business, but the one thing that we protect at kind of all costs is, in general, product development and technology. It's the only thing that we do, right? We are a product and tech company. And if we don't continue to invest in that space, someone else will, and you need to be constantly one step ahead of all the usual stuff, cybersecurity threats. All businesses want to be global. All businesses expect a certain level of resilience that's always getting better. So we've fought really hard to make sure that we continue to innovate for the customers. We think if the product gets better, that the growth will come. We're also we're lucky. Payments is a proven category. So I think it's a lot more difficult if you're a company who's raised money. The business model, no one's ever turned a profit before in the history of whatever business you're in, and you're now out there selling people, we want to spend a lot of money because we're going to get there faster. So we are quite lucky that the payback and various other things in the payments business is somewhat predictable. And there are a lot of very profitable companies out there that do what we do. So, to take a temporary period where we're really trying to over-index on investment, it's not the hardest sell. Yeah.
One of the things we talked about on the way over here that you didn't mention, which I'm surprised, is you didn't talk about price increasing, things of that nature. So we're seeing across the board, whether you've talked about, the hyperscalers, or it's just basically pushing price increases across the board. We're dealing with it across the portfolio. I'm sure you're doing it too. How do you think about that challenge, and how are you thinking about that with your customers in this environment?
Yeah, no, I think that the joke that I told was I was surprised to get an inflation price increase from LinkedIn, and my question to them was a bit like, which input in your business has actually gotten more expensive last year? It's not steel and timber. No, look, for now we have not increased prices, and I think we're kind of proud of that. Will it last forever? Who knows? But for us, that's the equivalent of kicking a small business when they're down. Credit's already tighter, and various other things that make it difficult for our customers. So we've really focused on, are there things that we can monetize for that base of clients? And for us, a great example is, we're in the working capital game. So I'm happy not to increase your price if I can help you with your working capital, which is revenue for us, revenue for you, and kind of we're delivering value. I also think that customers are always happy to pay for value. Just pushing the increase up and not being able to articulate what it is that you're doing with that money to invest it, just basically taking price in a market that other people are doing it, kind of goes against the value set, and we're not into that.
Great. Well, Shane, always great to connect. Thanks for taking the time. Thanks to SaaStock for having us, and best of luck with these initiatives.
Thanks, John.
Yep. Cheers. Thank you, everybody.